Dhiren Sarin, Director Technical Strategy at Barclays, joins us on the show. Dhiren, good to have you. What's your sense on the rally that we're seeing in Indian equities right now? How high do you think the Nifty can go from here? Because that's pretty much a big conjecture by market participants.
Yes, the Nifty's been one of the more striking markets globally, and of course a lot of political news coming out of India, but more importantly, from our perspective, from a chart perspective, we had seen a massive breakout to the top side through 6,400 many weeks ago, and ever since that happened, we've been quite strongly bullish on this market. Why 6,400 was important and still remains quite important on the downside is because these were the peaks that we saw in 2008 and also in 2011, and they held on multiple attempts. But now we've seen a shift in psychology. The market is ready to break away higher. In fact, any pullbacks we've seen, they've been limited and well above 6,400. On the top side now, this big psychological hurdle that we're overcoming, around 7,000, has been very key for us. And often when these big round numbers are challenged, it's worth sitting aside and just watching price action for the next couple of days. If we do see some follow through, then we can quite easily achieve 7,300 and possibly see another 5-6% higher. So overall, still bullish, getting a little bit cautious as the market's getting slightly overextended now. But overall, over the next few weeks, it still remains pretty positive.
Right. What sectors look attractive to you then in India?
Oh, various sectors come to mind here, but let's start with what's not as attractive, and this is not just in India, it's even globally. If you see the Nasdaq in the US, the technology sector is starting to underperform. Now this does raise some alarm bells, given that tech was the leading sector, the most bullish sector in the rally we saw earlier this year, but this time it's not about tech, it's about the major markets. So the Dow Industrials in the Nifty, it's sort of the major stocks that we've seen. A little bit on the banks sector as well in the Nifty, as again we've staged a pretty strong bullish breakout similar to what the Nifty in general had done many weeks ago. More recently, the bank sector in India is catching up. Another one to keep an eye on, which is quite a laggard but can start catching up further, is the infrastructure stocks in India, and that's quite in line with the US as well, where you have sort of some of the material indices performing relatively well. So these are the indices we are watching. Mainly just want to be with the main leaders here, which is the major stocks, the major Nifty index, and also the major Dow Industrials in the US.
How are you looking at the technicals on the currency? How is the rupee likely to move?
We're bullish on the rupee overall, and let's cast our mind to why. And one of the reasons here is EM bonds. Now, in this period of low FX volatility, which we've seen before, we've often seen a pickup in EM bonds, and there's a very strong correlation between these two phenomena. For EM bonds, the more the market looks to buy them, the better it is for a lot of these EM currencies that these bonds are denominated in. So to that effect, with the Indian swap rates falling 50 basis points over the last couple of months, it suggests that there's still a bid for bonds here, and the INR should remain pretty well supported. Our targets are towards 58.60, 58.90 area, so a little bit lower in dollar INR. What's key for us is that this week, as long as 60 spot 40 area caps, this trend still does remain lower for dollar INR.
What do you make of the volatility we have seen in global equities then? What's making investors nervous right now, post making multi-year highs? Most of these markets are seeming a bit edgy.
Volatility has been pretty benign, so in a way investors aren't very nervous. If we look at the VIX index in the US, the US stocks, the lower it is, the more calm the market is. The higher it is, the more fear there is in the market. So it's often called the fear gauge, the VIX index. And fear is low. One of the reasons is we just think volumes are low as we head into the summer season. The Northern Hemisphere summer, May, April, tends to be pretty subdued. As we go into June, July, August, in fact, sometimes the risks of a correction increase. More often than not, it is better to be invested in the market from the November to April period than it is from May to November. So we are in a little bit of a dicey period here. What we would look for is for gains, but they're going to be labored, a bit more sluggish, and while volatility remains low, it's not the time to look for very sharp or big moves. So it's something we're going to be watching out for the next month or two, whether this volatility can pick up and become a stronger story.